Silver Dave here, coming to you on a Monday morning. Monday morning in the United States, but evening here. And I was waiting a little bit to do this video because Monday is stimulus day, and I wanted to see what was going to happen on Monday before I made the video. So let's find out what's been happening with the stimulus. All of the markets have been waiting for stimulus. It's not just the US markets, also the European markets, the Asian markets. Everybody is looking at what's going to happen with stimulus. Now, today there is some progress, I guess. I mean, nothing is for certain because really people in Congress have until, I guess, Friday to pass something. And they don't get together until tomorrow to start working on hammering out the final details, and there are going to still be some sticking points. There's a lot of things that have been ejected, like I think pension protection. There's a lot of details. You can read it by yourself, the articles, and see what's in it. But really, there's a bipartisan group of senators who have been talking to each other and been trying to get something together. Now, in the new stimulus plan, there is no $1,200 of fiscal relief for people and $500 for children, so it's less stimulus than what we might expect. So how have the markets been reacting? Well, everything's pretty much flat. I think at this point, gold and silver, people are waiting to see what happens. Basically, there's a lot of bulls with money on the side who are waiting to see whether there will be stimulus or not to buy more into the market, or if, let's say, there is no stimulus and we have a crash of everything. So this is my perspective of what might happen. There's two cases. Either we get stimulus or we don't get stimulus. If we get stimulus, it's quite easy, right? When we get stimulus, most likely all the markets will go up, including the metals markets, the S&P 500, so the stock market. Today, the stock market has been pretty much flat, except for the Nasdaq. But even the S&P 500, it was just flat. It went up a little bit. I said this last week, during the day trading. Most likely, since it was down yesterday, people would have thought it was kind of a deal and they would try and buy in a little bit into the market on a red day. And it did happen. We went up a little bit for the S&P 500, but then today in aftermarket trading, it goes back to zero, So yeah, there's not much of a change in the financial markets. But if we do get stimulus, most likely we will see an upward trajectory for gold. We'll see for silver, the same. Silver's been perfectly flat today, but there is something interesting. I do have to point out that today the dollar dropped. You're like, yeah, but the dollar index is like flat. It's like, okay, but the dollar has been continuing on a downward trend relative to Swiss franc, and it's not a lot in terms of total amounts, 0.03, 0.02. But it is weakening. And I'm looking at this after hour tradings, there's quite a lot of movement and it's going further and further down. And in most of the models that I've made in terms of a gold predictor and in terms of a silver predictor, platinum predictor, I've been running different metals too. I'll post those results in a different video. But the Swiss franc is one of the most important leading indicators in the calculation, followed by other, especially for detecting if there will be a crash or exceptional rise. And we can see quite strong correlations between the two, where the Swiss franc tends to lead the dollar index, and then the dollar index follows where the Swiss franc's heading towards. If you look at the MACD of the Swiss franc, I think it's on the 24th of November, we could see that, the MACD was going to flatten out. We were heading to a crossover. And essentially, for the for the dollar index, we actually headed into this roughly the same period, I think. Am I right? 25th of November, 1st of December, we cross over, and we have here crossover 20 daily, MACD 50, MACD 50. Tends to react a little bit more violently. Anyways, so it tends to lead slightly. It tends to be a little bit more violent in terms of the direction because the Swiss franc only makes up 3% of the total dollar index. And so it does lead it in many cases, not all cases, but many cases, it leads the dollar index, especially in a more bearish market. You can see that its direction is clear, and it tends to be more aggressive in terms of when there is strong market volatility and strong dollar weakness. It moves more aggressively downwards than the dollar index, because the euro typically they try to stay on track and keep a certain level of parity with the United States dollar. If the US is doing QE, then the EU, the European Central Bank, will also do QE at a different scale, but they will still do QE. They'll follow a similar monetary policy. And they're typically more conventional monetary policy bureaucrats in the European Union, so they have no qualms about doing devaluing the euro and printing out money to shore up governments and government debt. So what did I see here? Well, I saw that today the Swiss franc, the dollar was weakening against the Swiss franc, so I was expecting that the dollar index will weaken, but apparently it didn't. So obviously there are other currencies that are not weakening against the dollar. I believe the Japanese yen, there's a Swedish kroner. Let's see how the Swedish kroner is doing. US krona. Huh. So it's a weakening against the krona, but less so. And the pound. Great British pound, pound USD, British pound. Okay, so, it's also gaining, so I don't know why the index is not red. Why isn't the dollar index in the red and it's gaining? That's a very interesting fact, because I believe the dollar index is made out of the pound, the euro, and it's been weakening against every single one except for the euro. The euro makes up 55% of it, but it doesn't explain why it's gained so much in this ponderation. Yeah, it's not a strong gain. It's pretty much flat. The euro against the dollar is pretty much flat too today. Basically, the euro is waiting to see what happens with stimulus in the United States before you'll see EU officials deciding what they want to do with whether they want to add more stimulus or not into the European economy. So let's go to the next case. We talked a lot about stimulus. What if there is no stimulus for gold? I think if we don't see stimulus for gold, we don't see stimulus, not stimulus for gold, but stimulus for the U.S. economy. At least next week, we could start seeing a crash of everything. And what I mean by crash of everything is we'll see red everywhere. Is red everywhere? Will it be the same scale for precious metals versus the stock market? The answer is most likely no. Typically what happens is precious metals and especially commodities are priced in dollars. When you have a crash of everything, the reason why gold, silver, and so on, they go and crash, part of it is because people try to shore up their accounts and so on. So they sell their gold and silver. But also because the dollar gets slightly stronger during a crash of everything. And but I'm not really seeing that today either, because I didn't see the dollar strengthening against the Swiss franc, even though the stock market was slightly red at the end of the day. So people aren't really selling and moving to the dollar, which is it's a worrying sign, because if they're not moving to the dollar, it means that they're moving to other currencies, and actually that's pretty bad because especially if there is a crash and they're not thinking of staying with the dollar, it means that they're also probably not thinking of buying back into the U.S. market, and they could be going for other things. They could be going for emerging markets. That's becoming much more attractive at this moment. They could go for Chinese bonds. They could go for Chinese treasury bonds, which are AAA rated according to S&P. So most institutions will buy that up. Individuals maybe not, but institutions definitely, especially if they give a 3% yield and the ETFs give like a 8%, I think, year-on-year return. It's some crazy numbers for bonds. But yeah, it's a high yield bond, high yield government bond. So in some ways, that might happen, that they're actually shifting out of dollars in preparation to buy more yuan-based assets. Let's see, CNY USD. Where is yuan? CNY Chinese yuan USD. Nope, it's also, interesting. Sell off everywhere. Oh no, so USD, okay. Yeah, this is interesting. There seems to be red everywhere. I guess we'll see what happens. Nothing's moving too much. So because I don't see like a 0.1% move, or it's like 0.001, so it's pretty much zero. Everything's flat today. That's really interesting that everything's flat. But the yuan has been gaining on the dollar since May. And it did crash somewhat since the beginning of the year when they first announced it was a pandemic in China. But once they got it under control, the yuan just like skyrocketed, which is, I guess, normal if you're an investor, especially if you're an institutional investor. They'll pour money into yuan-based assets at this point. They'll start buying up yuan, pour it into yuan-based assets. So, yeah, it's going to drive up demand for the yuan. And I think what will happen to gold is potentially, if there is no stimulus and there's a complete market shift, investors, especially international investors, might start rotating out of U.S. assets. And you're like, is that good or bad? That's actually terrible. That's terrible for the U.S. stock market, and it's terrible for the dollar. In the short term, it would also be bad for gold, because in the short term, it will be part of the crash of everything. The dollar might get stronger a little bit, but it won't move down on the same scale as the stock market. If the stock market moves down like 80%, we might see a 20% drop in the price of gold. That said, 20% can be quite a big drop. It could be 20% would be $300, $400 drop. So we see $1,400, $1,500 gold, maybe $1,700, maybe like best case scenario $1,700 gold, but it will be a drop. Will it recover? Yes, it will recover, because what might happen is investors will diversify out of the dollar assets, because now the most common thing to do when you're as an institutional fund, especially as a pension fund, you would buy an international pension fund, you would buy U.S. assets because the dollar is relatively stable, which it isn't at this moment. You'll buy U.S. assets such as the S&P 500 ETFs and treasury bonds. And you decide on a mix between treasury bonds and U.S. stock assets, right? And typically you don't buy European ETFs because they have high management fees and they don't grow as much. They might double over the course of a year, but the euro devalues itself like over time slowly, and the ECB typically tends to be more aggressive in sort of doing QE, and public spending tends to be more aggressive. So it does devalue itself faster in normal circumstances, except for this year. This year, the dollar just the Fed just dropped the dollar. They just went ahead and did, in July, QE, boom, you see this huge QE, this shock here. And then I guess everybody priced in the expectation that they would do more. And then we just had we're kind of down to the level where it's before QE. And if we go down to the level where before QE, it means actually I think at 1800 levels, gold is undervalued because this is gold priced in dollars without taking to like as if we didn't do QE. This is, so you have to think about it like that. And yeah, it would be actually at 1800 gold or 1800 and below, gold is quite cheap. It's not super expensive. And especially if you compare it to the stock market, the S&P 500, which is priced at some crazy levels. You look at the RSI, it's pretty much peaked. I mean, it came down a bit today, but if it goes up because of stimulus, we're going to get this another peak here. And then I have no idea. I did look at it. I think we're at 80% above GDP. So we're kind of pricing in 20 years of earnings into the price of the S&P 500, which is, you don't do that for stocks. It's like maybe it's quite expensive. It's really expensive. Yeah, so what do I think might happen with gold? I think if we don't see stimulus, it's not actually such a bad thing. If we don't see stimulus, we might see much lower gold, probably down to 1700, 1680. And then what might happen? Well, what might happen is the stock market will have tanked almost completely. I think the stock market would be utterly destroyed if there's no stimulus by maybe not utterly. Actually, I don't know how much, but it will go into the red, and it will go, if there's no stimulus, you can expect the stock market to start dropping. And how much will it drop? That's anybody's guess, really. If there is no stimulus by Friday, and then we don't expect stimulus until next year, we are just going to expect the stock market to drop. And that means that it has 1, 2, 3, 4. It's got about like 2 weeks of dropping to do. In 2 weeks, you can drop. How long did this take? Yeah, roughly. You can drop, boom, boom. You can drop almost all of this S&P 500. You can drop a third of it. And will it drop a third? The thing is, right now, is the economic situation better than here? The answer is no, it's not better than here. If anything, the economic situation is worse than when it was here. So if you were going by the rationale of it will correct towards the economy, it'll converge onto the GDP, we would probably, following that calculation, would probably drop all the way down to roughly here. So down to the 2000 levels. Lower than the first drop. 2000 levels drop. Will it be bad? Yeah, it'll be pretty bad. But will it give us buying opportunities? Yes, it will give us a lot of buying opportunities. I would just sink everything into it. I would start easing in. I would buy a lot of stuff. If it does sink down to the 2000 levels, that's it's a major economy. There's no reason. 2000 levels is, I don't know, last time we saw was 2016. So yeah, it is relatively, it would become cheap. But you also have to realize that even at the 2000 levels, you have to price in what the future earnings are like. And if the dollar is completely tanked, and we can expect less returns over time for all assets, then is it really that cheap at 2000? Maybe it's cheap at 1600. At 2000 levels for the S&P 500, it would be cheap, but it wouldn't be like you're like buying pennies on the dollars on the penny. You're actually buying maybe dollars on the 50 cents. Anyways, yeah, which is still a good deal, but it's we'll see. I mean, I don't have a crystal ball. I don't know what will happen to the markets. I just when I did my predictors, the bull market condition is still there. That means after QE, most likely it believes that we should be at $2,000 gold. The reason why we're not at $2,000 gold is because of lack of stimulus. The midterm, it's sort of flattened out its expectations for downward pressure. I mean, it doesn't expect any further downward pressure, even if considering the market conditions. And here neither. There's really very little downward pressure overall on all of the predictors. And the upper pressure long term is 2,000. It doesn't seem to want to go below 2,000 no matter what price it keeps dropping to. Like even if I go back to the point where it was dropping at 1700s, it did still believe that we would be around 17. Let's see. There must be a point where it was at 1700s. When it would drop to 1770, 1780, it still believed that like fair valuation is around in 3 months. That means next year, somewhere in March. End of March would be around the 2000 level. So 1980, close to 2000. And I think that's kind of accurate, that we should be able to at least expect $2,000 gold by 2021, sometime in 2021. How much of what will happen afterwards, I don't know either. I can't tell. I don't think we are going to see crazy levels of $10,000 gold. Hopefully not. Like I said, that's not like world I would like to live in. It would be a complete. It means that the dollar is no longer the world reserve currency if it's a $10,000 terms, and then what other currency is there that's going to replace it? We don't know, and that would be a very interesting time. Anyways, I'm still stacking gold and still stacking silver. So I ordered some gold sovereigns. I bought in a little bit into the dip. I'll probably buy some more, depending on what happens when I see end of the week and as I get my next paycheck. So stay tuned for what I'm going to buy next, and have a great day. Dave out. Oh yeah, don't forget to like and subscribe and click the bell notification button. Thanks a lot.